Now, I want to know, one, why do you think crypto and everything else has crashed? And two, is there an opportunity in all of this disruption for somebody to take advantage of or not?
Well, if we look at the past year, what you've got is a drawdown of all financial assets. So the NASDAQ is down about 22% over the past year. And so NASDAQ represents tech companies and all the risk assets. But on the other hand, if you were to go and look at like the bond market and the bond portfolios, bonds are down, like the BOND index, the long bond index. The idea was if stocks work, then bonds will be a low return and stocks will be a high return. But if stocks trade down, people will shift their money to bonds, and the interest rates will go down, the bonds prices will go up, and you'll actually get a yield on your bond portfolio. But of course, that broke around March of 2020. And the reason it broke in March of 2020 is because interest rates got pegged to zero. So after we had lowered interest rates from 5%, 5.5% to 5% to 4.5% to 4% to 3.5% to 3% to 2.5% to 2% to 0, and left it at zero, then take interest rates negative. If you can't take interest rates negative, then bonds don't act as a hedge to stocks anymore. I mean, you're kind of, and what we saw with stocks is the Federal Reserve printed a bunch of money, pegged interest rates at zero, and then you saw all these risk assets explode. You saw the NASDAQ explode up and the S&P explode up. You had a K-shaped recovery. And in the K-shaped recovery, it's almost like the entire economy was in a train wreck or in a car wreck, and we got taken into the hospital and they pumped us full of morphine. The Fed just pumped tons and tons of liquidity, and we stayed high for about a year and a half. And they're taking 3 steps at a time, multiple times. So we took the cost of money down faster than any time in history, and now we're jacking up the cost of money faster than any time in history. And the result is that our post-mortem, since we started buying Bitcoin more in December, and we kept buying Bitcoin. We ended up buying nearly $4 billion, $3.97 billion of Bitcoin over that time period. So in terms of like our strategy, MicroStrategy's just bought as much Bitcoin as we get our hands on since August 10th of 2020. Summary for us, MicroStrategy's strategy was buy as much Bitcoin as you can and buy it with equity and debt. We borrowed money. We borrowed $2.2 billion at a blended interest rate of like 2% or 1.8%. So we borrowed cheap money while money was cheap, and we bought Bitcoin. Now people are saying, that's stupid because Bitcoin was trading up and then it traded down. At the end of the day, if your time horizon is a decade or longer, if you can borrow the money for longer than 5 or 6 years and you can hold it through the volatility, then raising cheap money, grabbing billions of dollars at low interest, and then investing in a scarce, desirable asset that's got sort of a technology appeal and holding it for a long period of time, that's going to be a good strategy. That's why our stock is outperforming Bitcoin. That's why we're outperforming all the enterprise software companies, all the big tech companies. And the reason Bitcoin's outperforming all the other asset classes is because it's scarce, it's desirable, it's technical. No one's going to write a piece of software to make gold better. You're not going to put gold on a billion iPhones. Is a protocol that's been rolling out lately. Square Cash App or blocked Cash App put Lightning right into Cash App. It means that you can send $100 of Bitcoin to anybody in the world on a Saturday afternoon for less than a penny, instantly, peer-to-peer. If you want to create inflation, you do it a couple of ways. Either you cut the supply, or you cut the supply of the product you want to buy, or you increase the supply of the money that's available to buy it with. So if I make it illegal to manufacture food, the price of food's going up. Right? I don't even need to print more money. right? I can create inflation just in a war, like in World War II. We have gas rationing. You have food coupons. Why? Because all the gasoline gets shipped off to Europe to put in tanks or to put in airplanes or put in ships. So when you have policies that are declaring war on something, you divert resources. So we had a war on COVID. We have a war on carbon, an energy war. If I decide I don't want you to burn coal or oil, then I drive up the price of energy. So every single time you actually put a public policy in place, you create inflation. Policy is inflationary. The more policy you have, the more inflation you have. If you're an entrepreneur or you're an investor, you have to have a 10-year time horizon. And nothing great is accomplished without a decade. If you look at Microsoft, the company's founded in the mid-70s, a decade later in their mid-80s, if you're not willing to hold Microsoft stock for a decade, you probably didn't get to the point where they came public. So a decade's a short period of time for someone who's an industrialist or an investor. I mean, Warren Buffett still owns Coca-Cola stock, and he must have bought it 50 years ago, right? So I think that anybody that's a billionaire, right? All of these names, the Sergey Brins, the Mark Zuckerbergs, the Jeff Bezos, the Elon Musks of the world, they didn't get there without holding an asset that had technical potential for a decade or longer. There's no get rich quick scheme. So I think that people want an easy route. If you're trying to get a quick win with no volatility, with no risk, doesn't make sense. And if you're actually trying to be successful in a hurry with volatility, that probably still won't work either. I mean, ultimately, success comes from taking a decade-long view. Right? John D. Rockefeller, Jeff Bezos. Right? We forget, like, Tesla was founded 20 years ago. People think it's an overnight success, but it's not an overnight success. And with regard to the macro picture, we live in a time of unprecedented public intervention in the affairs of the economy. Right? Unprecedented. We never in the history of the country did you have a government that told you couldn't have Thanksgiving dinner with your family because they didn't want family members to sit too close to each other. Yeah. We arrested a dude on a surfboard in the middle of the Pacific Ocean for basically paddle boarding in the middle of the Pacific because that was deemed as unsafe, right? That kind of stuff. So we have an unprecedented amount of encroachment. We have politicians overriding the free market. They tell you what kind of energy you can use. They tell you, how far you have to sit from someone. They tell you whether it's safe to be sitting in your office at a table next to someone. Lots and lots of encroachment. Each of these areas, right? War is the suppression of the free market to the benefit of the public. So if the government keeps suppressing the free market everywhere, what you do is you cripple production, right? Yeah, that's what we have tariffs on Chinese imports, right? That drive up prices up or down, drives them up, right? You have a war or a labor war, right? If everybody unionizes and if everybody's afraid to go to work and if everybody thinks that their life is threatened to stand next to another human being, right? And if we're afraid to trade with each other and if we're afraid to talk with each other, right? If you have capital controls, wage controls, price controls, export controls, manufacturing controls, right? As those things happen, they have a chilling effect on the economy. So we have a set of metrics that are just manufactured metrics, and then we focus on them and then we talk about them. But ultimately, what you have is an economy that's distorted. There are some things we produce more of, and there are some things we produce less of. And we have flexibility with what we choose to measure. The monetary intervention is the government basically, if I put everybody under home arrest for a year, it's going to be a problem for the economy, right? I mean, if I shut down, they did it in New Zealand, they did it in Australia, they did it in Canada, they kind of did it in certain states in the US. If I do that, that cripples the economy. So while I'm doing that, then if I go ahead and I pump a lot of money in the system, right, then maybe I create a wealth effect and I can say, well, we're recovering. But ultimately, you never recover from the fact that nobody went to school for a year and nobody went to work for a year, right? You've lost that forever. You're just not measuring it. And so I think right now what you see in the economy is lots of distortion of numbers, lots of distortion of metrics, right? The fact that we have a debate over whether we are in a recession or not is kind of laughable, right? Because we've been in a recession for 24 months. If you were measuring the production of goods and services, all you got to do is look at the variety of things that were available to you in January of 2020 versus the variety of things available to you today and the delays. If you've got 1/10 the selection and it takes 3 times as long to get it and it costs 20% more, how are you not in a recession? People